Good afternoon, traders. This is Christian Farmer at Strawberry Trade Group, and this is your end of day market recap for Thursday. What is today? Today is the 13th? 13th of March. So we are moving closer to the end of the first half of the month of March. Perhaps we get a better second half of the month. I've noticed that previously, is that not just like, regarding this month and what's been going on, but, just traditionally we tend to have either a good first half of the month or a bad, a good first half of the month or a bad first half of the month, and then it's the opposite on the second half. So it kind of flip-flops a little bit. So, maybe we're setting up for a better second half of the month. However, that's just something to kind of think about and to ponder and to be ready for that if the price action changes. So I'm going to talk a lot about that in this video. I'm just going to talk about what is. Right, rather than what everybody seems to be doing. I see is, especially when I read some of the really good analysis that folks put out on Twitter, which they do. But I see more of anything like what I see a lot is people trying to time the bottom and say, oh, this is his most, the last time we saw this was such and such time, or the last time that we saw, and people putting a lot of indicators saying that things are oversold, but you don't even know what's in the indicator, or talking about sentiment models and so forth. But I see very little people talking about price. That's the number one, and remember, that's the number one indicator that's out there. So let me hit the risk disclaimer first. Risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving any advice or recommendations. Everything that we're going through is for information purpose only. So one thing I will start with, I'll kind of go, but I try not to make these videos too negative, but it's just really, it is what it is right now. We've been going straight down, and really I don't see any sign that the selling pressure is letting up. So, what does that mean? That means that you just have to be patient, right? And stop looking for some of these people who, like, every other day think that they can call a bottom in what's going on. I don't see it. I also think that we're breaching levels that tell me that we're not holding support. So also when you look at today was just another straight sell-off day. IWM was down. IWM was down 1.5%. The Qs were down 1.8%. The SPY was down 1.3%. So I don't know how anybody could say that they feel like the bottom is in. Also, we're seeing the same pattern, like, that over the last few days, where the market kind of recovered, like does a small bounce, like somewhere between like 1:30 and 2:30, 3 o'clock. And then by the time we get to 3 o'clock, where there's more volume, right? The sellers are taking control and they're doing more selling. And I don't know who it is. I don't know what parties are doing the selling. It could be CTAs. It could be, so some, a lot of systematic selling going on. It could be just folks deleveraging, right? When I traded in 2008, 2009 for, institutional, it felt like that what went on for months, because back then, like 2007, I remember hedge funds were carrying huge leverage. They just were allowed to do that. There wasn't any major regulations, so they were levered. Some hedge funds were like levered 30 to 1, so they couldn't unwind all that exposure in a day. They basically had to do it over the course of weeks. And I remember just getting, at that time I was running an equity swaps book where we had swaps facing hedge funds, and on the other side of that I had the hedges. And so the swaps, what they would do is just, every day they were coming in and they were unwinding their swaps positions, and they would usually have like long short ideas on, and they were having the longs on someplace else. But anyway, all I'm trying to say here is sometimes it takes time for folks to unwind all their exposure. And make no mistake about it, like if you look at as soon as we get to 3 o'clock, where there's just heavier selling, right? And that's like, if I know VWAP is so popular these days, right? The term VWAP, right? And people put that on their charts and they say that. But really, when I used VWAP, it was a trading algorithm when I was an institutional trader. What you would do is like if an institution wanted to execute an order over the day, they would say, "Hey, VWAP that over the day," meaning execute that using volume weighted average price. And there's a curve that all of these algorithms look at, and they basically look at the liquidity of the day, meaning during the beginning of the day, there's lots of liquidity. As you get closer to lunchtime, right? And that's why I never really will look to see what happens in the middle of the day because there's no volume then, right? And all these algorithms, they don't trade much volume at all between the hours of say like 12:45 to about I'm sorry, 11:45 to about 1:30, right? And then once you start coming out of that time frame, those VWAP algorithms will slice out more of that over the day order as you get close. As once you get into the 3 o'clock hour, now you're really now accelerating whatever that order is. Why? Because that's where the volume is. So they try to basically that VWAP algorithm looks to trade more when they know that there's more liquidity in the market, and so they slice that order over that historical VWAP throughout the day, trading much more in the first hour and a half of the day, last hour and a half of the day, or really last hour of the day, and very little in the middle of the day. So when you see this, all I'm trying to illustrate is when you see this heavy selling at the end of the day, it's just because somebody's doing a lot of selling. And so you can kind of see like where you don't have there's no confirmation that that selling is done. And I don't care what retail surveys say, about folks being bearish or bullish. I don't think that that matters much because we're also, even I've talked about in these videos that I look for some signs where things are getting where there's some type of panic or something like that that's in the system. And guys, we're just not seeing that, right? One of the ratios that I talk about a lot is the equity put call ratio. When people are buying more and more puts, once there's like a fever pitch for puts, here's the equity put call ratio. There's nobody who's going out and buying a lot more puts versus calls. Remember, forget about the stuff where people are telling you how much volume is, how much put volume is trading in SPY, and then they're not showing you the call volume. That is the worst analysis I think I've ever seen. The other thing is you can't go back more than a couple years and try to make some comparison because they didn't have 0 day options there, zero day expiration options. So you're not comparing anything. You can go back and look at call volume 20 years ago, but they weren't trading weekly options then, and they weren't trading, maybe they were trading weekly options then, but they just didn't have listed options for many stocks like that, and now you've got 0 day options, which I believe like 50% of all the options being traded now are 0 day options. That was not a product that was there 2 or 3 years ago. So if you're trying to come out with some comparison that the option volume is much more than it ever was, yes, it was because people weren't trading those products like crazy like they are today. Anyway, it's just there's a lot of bad analysis out there. So, what's the takeaway from today in terms of sector? You could see that so I mentioned about inflation and about how that's coming down. Okay, that's a good thing. But the secondary issue is that people are really fearing that there's a recession coming. And look at what happened to travel stocks today, right? They're one of your worst performers, right? We did see some single stock put buying today in things like Airbnb. Right. And I have to say, like, I don't think people are going to be going on vacations like they were over the last couple of years because they're worried. You get more and more worried, you stop your discretionary spending. Now, this is not something like I'm bringing this up in this video after we've had a multi-week sell-off, but I think we've seen consumer discretionary stocks already go down, right, which is the XLY ETF, but you're really seeing some of these things get hit. Take a look at like Hyatt, for example. well, right? Look at the hotel names, right? They are getting absolutely smoked right now because people are thinking that they're going to get the same revenues because if more and more people think about recession, they're not going to be booking that extra vacation, right? And the all of these names have done very well over the last few years. You know, airlines have done very well. You know, we heard the other day that Delta, was going, mentioned that they are cutting their guidance. I mean, look at what Delta's been doing, right? These things are free falling. It's not even close. So, so when does this bottom out? I'll give you an example. So before I do this, let me give my disclaimer. I don't like when people overlay one chart over another from another time period and try to come up with some conclusion. Now, there are certain things about every time there's a market correction or a big sell-off, certain characteristics about that, right? About the price action and so forth. But they don't go hand in hand. Every time that we have like, as far as I know, as long as I've been doing this for like, over 20 years, every time that we've had a big correction or a bear market, it's for different reasons. Now, again, there will be similar characteristics about what you see in the price action, but you can't overlay a chart and because there's a bunch of knuckleheads who did this in 2022 and they say they started to say, "Oh, I'm going to overlay a chart of 2022 with 2008, right? And I'm going to see if that will follow out perfectly." It didn't do it, right? And then those same knuckleheads, like once that was proven wrong, they're like, "Oh, maybe it's 1929." And then they overlaid 2022 with 1929, and they were disappointed because that didn't work out for them either, because it doesn't work that way. History doesn't repeat, but it does rhyme a little bit. So let me bring up a chart. I'm going to just pause the video a second. All right. So what I'm showing you is with the chart that's in front of you. And the reason why I'm using this example from 2020 is because it's a very easy example to basically give you some ideas of what happened. Um, so again, it happened for different reasons than what's happening right now. But some of the price action you'll find is a bit similar. Also, look at the volume. So this is SPY. Do you see the difference? Right. So low volume there's always low volume when the market's moving up, and there's always high volume when we have distribution. I'm going to say that again because people confuse this all the time because it's like, oh, I don't like it when there's a low volume rally. That's when you should like it because that's when it normally happens. Take a look at back here when we rallied. Do you ever see any big volume on some of the biggest rally that we had after we made this bottom in 2022? Tell me where you saw big volume on this big rally. Look at this. No, this is where you make your money and you do it when it's low volume in the indices. It's a little bit different with single stocks. People like to see big volume on a breakout. Okay, that makes sense. You want to see some reinforcement of a breakout. But you see this big volume whenever there's big distribution. All right. So if you could take one thing away from in this video, that would be one of them. The other thing is, I remember, I was running my trading room same time, and I had people all when this was going on. Oh, I'm going to buy the dip. I'm going to buy the dip. We've gone down too far. And I said to people, I'm not doing much. It's not like I'm not doing anything, but I'm not doing much until price gets above the 5 period moving average. Right. So here was a little bit of a fake out. Sure, I got fooled a little bit on this. But once we started descending back below that 5 period moving average, you know that the trend is down and sellers are in control. It's just that simple. So you don't try to predict and say, oh, look at the volume on this day. That was the capitulation. You have to wait for that to happen. Now, when did we start going down? Right. Well, that was February 25th. Right. And we didn't bottom for about a month. And this was March 25th. So it was about a month. So yeah, I'm every day I'm watching the price action and I'm looking for signals and I'm looking for things to change for price to kind of retake that short-term trend. So remember this chart for a second. Remember the price action. Again, it's not going to be the exact same. So please don't get that in your mind. I'm saying it again. It's what we're experiencing is not the same as then. You could just use any time that we sold off as an example for when sellers are in control and look at how honor the price action below the 5 period moving average. And then once we retake it. So, okay. So fast forward to today. Number one, look at the volume. Do you see it as similar as the chart that I just showed you, right? Its volume is heightened, right? So we've got distribution, we've got liquidation going on. Do we have any sense that this is done, that price is going down, that is done? I don't see anything of that nature because I don't see price getting above the 5-day moving average. And this is even an easier chart than what you saw so far in that I just showed you in 2020, because there was a spot in 2020 where we actually tried to break it and then we resumed lower. Here, this is just going straight lower. So you don't know if that spot is going to be, tomorrow here, a week from now here, 2 weeks from now here. You don't have that confirmation until you get it. So the reason why I'm going through this for you is to forget about all these people who are trying to create some type of FOMO that you're going to miss a rally, doing some bad analysis. Just wait until the price gets back above the 5-period moving average. I'd also like to get it. I don't like that we're breaching into the value area for the year. And as I've been mentioning, I mean, it's tricky because we could have done it yesterday if we went a little bit higher, but we didn't. Right. And 561.17 is a level that I'm watching. This is the value area for the year. And if you go to the weekly chart, right? You need a complete bar for that to have a complete candle or bar, whatever, if you're using. But so we have one more day of the week. I mean, it's not looking good. We're going to need a rally of about 2% to get us back above here. Could that happen tomorrow? Anything could happen. Anything could happen on a given day. I mean, we've just been going straight down. S&P was down, another 1.3% today. And anything could happen with this volatility. We could rally, but we just don't have any confirmation about that yet. So yeah. So, and that's the same thing with all the indices right now. They all look ugly. The Qs are going down a little bit faster. I think a lot of things are being unwound, right? I've mentioned in these videos that I mentioned last week, I was like, the AI trade is coming undone, right? There's no more, there's cheaper replacements out for AI. All these companies that are spending, what do they call them? The multi-scalers or something, the hyperscalers. To me, that's a kind of a waste of money to be throwing out that much money when somebody's going to come out with something cheaper, and you're going to be able to, why do I think, by the way, think that somebody will come out with a cheaper version to develop AI? Because that's how it always works with technology. People, folks come up with cheaper models, right? You could go back to any product that we've had over time. Go back to the personal computer and how much costed people when they first came out, right? More, and when this is how a capitalist society works, right? The more, when there's profit margins and something like that, when there's only one or two companies, what happens? More companies come along, make developments, and they make some better system, and their processors are either faster, they have more memory in their computers, right? And that more and more competition drives down the price. And that's the same thing with AI, right? So that's why you can't, like, in my opinion, you can't think that, like, okay, yes, I think AI is a theme that's going to be out there for a long time, but there's going to be margin compression because new entrants are coming into play. Just like with this, what we heard with the deep seek stuff. Now, I'm not saying that that's going to be the model, but there's going to be some other company that comes along and comes out with another AI model that's probably going to be cheaper. I can't tell you when, but that's the way it works, right? And meanwhile, all this fuss about AI and all the valuations and so forth, all of that is coming undone. Also, not to go on. Sorry, I'm not trying to go on in this video, but it's the same thing with the Mag 7 names. Those names have been popular for so long, but they can't be the best forever. And I've talked about that, a number of times over the years. Again, trying to time that is not easy, but I think really that's what's going on, is that a lot of these companies, they're just not going to be able to maintain that. But anyway, I don't want to get too bearish here because I'm waiting every day. I'm looking for confirmation. We saw midday today that, like, the VIX was actually down, right? Until we started to see heavy selling come in, right? And so you've got to kind of watch to see, you make your conclusions when the day's over, not just because you see a buy program come in at 2 o'clock. And again, I try to tell, my room, I said, just because we've had this nice buy program over the last 40 minutes, we're coming upon the 3 o'clock hour where every day for the last 3 days we've seen heavy selling pressure come in. So sure enough, that's what we got. What else did I want to mention? As I mentioned in yesterday's video, I think that you want to start looking at what comes next, right? So we have had some data that's come out this week that's indicated inflation is coming down. Great sign, right? Next, what we want to watch is maybe there could be a Fed pivot, right? And Jay Powell saying something next week that basically says, hey, we're going to get ready to cut interest rates again. I think that could be a catalyst, right? And that comes right around that could be that turn in the middle of the month. I don't know, but that could be one of the catalysts. Right now, so again, they're not doing anything next week on the 19th, but maybe they're going to signal that they're going to start cutting interest rates once we get to that May meeting, right? So that's what I would expect. Like, I think that for a real market turn, you're going to need to see a dovish Fed. So again, and I'll let the price action confirm that for me. Guys, have a great night. And again, the main thing that I'm trying to convey here is be patient with this price action, right? And so that you can retain your buying power, so that when the market does turn, you can be there. Have a great night, everybody. See you tomorrow.